Matt, it's about 1:48, so I popped home just to see, had some time just to see what's going on. I got a couple green trades. So the total money we spent is over here, the net gain, but today's gain. So something's really up over PEG. So what did I do? Hover over this, click in it. There you go, hover over it. I have, let's just open it to see what's green. All right, so this one's doing up 3 grand. So I have 100 contracts to be able to purchase calls to call stock away from somebody. So 100 contracts, each one has 100 shares. 100 times 100 is 10,000. So my multiplier is 10,000. I control a block of 10,000 stock shares, and I am saying that I purchased the right to call away the stock from them at the low price of 55 if it goes up higher. So that begins to be more valuable as it goes above where? 55, right? Anything above 55 starts to get us into profit, okay? So let's go look at the chart. We got PEG right here. We're looking at the hourly, and let's see. Here's 50, 55's way down here. It's bouncing up today. So it's up to 56, and this is the 200-day line or 200-hour line in green. So that's a long average. The 50-hour line's in red. That's a little more advanced, more nitpicky line, and the 13-hour. That's just what's happening. Really, really laser focused. So we got a bounce today. It's going up in value. Usually this is the baseline. This is where it trends back to, and it's really down. So I thought, hey, if we can, a couple of days ago, I was like, man, if I can purchase the right to get it at 55, when it bounces and goes back up, it's going to get tremendously profitable. So here's our profit beginning. I could take profits right now by just coming over to the hover over this, and you get this little button that says close. See it? Close. You could close the position and cash out. But I'm going to ride it a little bit longer and just wanted to show you the example. So that's today's news. Also, if we close that, KLAC is green. I think only have one option. So I bought 100 contracts, or I controlled 10,000 shares. I said I have till September 19th to call away the stock from you at the price of 155 for KLAC. KLAC. And what was that? At 155. So right now everybody's like, I'll sell you that, you idiot. So it cost me really $9,000 to control 10,000 shares, but the price is 10,000 times 144,000. That's like 100 grand, and I only paid like 8,000 to do that. So if it goes to 155, I'm believing it's going to go back up to 155 and keep going. If you look at KLAC on the weekly, just to kind of get a long term, how's this thing been doing? Very volatile. So if it keeps going up, you can even look at the monthly. I'm thinking it's just going to keep trending up, and at that rate hit 155 and cross it by the time my option expires in September 19th. So at that rate, that's what I'm planning on. So we will see what happens. So September on that one. Some of these are expiring earlier, like the August 19th. We'll have to really keep an eye on the early ones, and September 19th and August. But I have auto sells triggers put in place, so if it happens during the day, I just get cashed out like I did on, let's see, market account performance. I got cashed out when I wasn't looking on AT&T, on Delta, so it just happens behind. So right now, these are the trades that are losing value as time gets shorter, and the premium we paid to control the stock kind of ticks away in value. So anyways, we've got 4 things happening right now. We'll keep an eye on it. Okay, bye.